Hello, everyone, and welcome to the Master Series, your guide to intelligent production, brought to you by Entertainment Partners. I'm your host, Natalie Nelson. In the Master Series, we focus on the important issues impacting the industry and its workers through in-depth discussions with legal, tax, payroll, technology, and production experts. And today, our experts will be discussing the UK's new independent film tax credit and how you can leverage this generous incentive for your next production. A quick housekeeping note before we get started today. First is that we encourage you to join the conversation by posting questions in the Q&A section of the Zoom call. You can do so by clicking the Q&A icon in the navigation menu, and we'll do our best to answer your questions after today's discussion. Also, please take a few moments after today's webinar to answer a short feedback survey. This includes an opportunity for you to give us feedback as well as suggest topics for future webinars. Your feedback is very important to us, and we thank you for it. For over 46 years, Entertainment Partners has been at the forefront of the industry, continually investing to ensure that our clients and their productions are successful, no matter where they're headed. Our established and growing teams in North America, the UK, and Australia specialize in payroll, technology, incentives, tax, and accounting services. And our experts, some of whom you will hear from today, offer decades of experience and the best guidance in the industry. Now I'm pleased to introduce you to our panelists. We are joined today by Aaron Williams, Senior Vice President of Production Finance at MRC, a finance executive with over 25 years of industry experience. Aaron's career has spanned work on several films worldwide on behalf of 20th Century Fox, Fox Searchlight, Walt Disney, and Media Rights Capital. Currently at MRC, Aaron has been integral to the financing, production, and tax incentives on various UK productions, most recently the critically acclaimed film Saltburn, written and directed by Emerald Fennell and produced by Lucky Chap, distributed by Amazon. We are also joined today by Caitlin Bogert-Upton, Senior Vice President of Sales and Account Management here at EP. Caitlin's 20-year career in the entertainment industry began with EP's Central Casting, where she worked on hundreds of shows, including CBS's CSI Miami and Michael Bay's The Island. Following that, she spent 8 years becoming a product expert and leading EP's product sales team, responsible for Global Vista, Vista 5, VPO, Movie Magic budgeting and scheduling, eventually becoming the product manager for the Movie Magic Suite, among other products. Leveraging her deep application knowledge, she moved into payroll sales and has worked with independent production companies and major studios, helping to drive the adoption of smart accounting. Today, she leads the global sales and account management teams for Entertainment Partners, servicing all clients in all territories. We're also pleased to welcome back Lloyd Gunton, Director at FLB Accountants, an Entertainment Partners company. Lloyd has over 13 years of experience in accounting practice, training at Ernst & Young in its media audit division before moving to Safri Chapnis to specialize in creative sector tax credits. He has worked with productions ranging from micro-budget independent films to some of the biggest Hollywood blockbusters and high-end television shows. These include No Time to Die, His Dark Materials, The Wheel of Time, and 1917. Lloyd joined the FLB team in April of 2023, and he heads up the creative sector tax relief offering. And finally, today's moderator is our own Joseph Chianese, Senior Vice President and Practice Leader of Production Incentives. Joe provides production, legislative consulting, financial, tax, and administrative services for domestic and international production incentives. He has over 35 years of accounting, government affairs, production incentives, and tax experience, and has held positions at Sony Pictures Entertainment, The Walt Disney Company, ABC Television Network, Paramount Pictures, and Ernst & Young. Hello, panelists. It is lovely to see all of you today. Thank you for joining us. I know this new independent film tax credit is an exciting addition to the incentives offerings, so you have a lot of ground to cover. So, Joe, I'm going to pass things over to you.
Thank you, Natalie, and good day, everyone. And thank you for joining us as we discuss this new UK independent film tax credit. And I have to say that I'm very excited about this one, and you'll soon learn why. I also thought a good way to start would just be to talk about where we stand as an industry right now. I guess the best way to say it, we're definitely in a point of transition. We're starting with a very slow rebound from the strikes, with another strike pending, possibly. We're now seeing a scale back on TV production, both at the network level and with the streamers. We're also hearing the major studios potentially scaling back on film production. Just yesterday, Marvel announced that they would only be releasing no more than 3 movies a year and maybe 2 to 3 TV shows a year. A big change from a couple of years ago. Although we're heading into the summer and Disney just got some great reviews for Planet of the Apes. So maybe we'll have another Barbie Oppenheimer summer. We'll keep our fingers crossed for that. On the incentives front, here in the US, we haven't seen any major shifts in incentive programs this year. While the last 2 years, we saw some pretty consistent positive changes. So that's very comforting, I would say, for the industry, especially the independent producers. Outside the US, we're still seeing a lot of competition from places like Canada, Australia, and the UK, which we're going to be talking more about. I think another sort of good starting point is just talk about the state of independent producers. And here I'm going to ask all my panelists to sort of chime in. One thought I had, especially when I heard about the shifting back on the larger producers, and I thought to myself, could this be an opportunity for the independent producers to supplement the content that consumers now are expecting with regards to whether it's film distribution or streamers? So could the independent film producers supplement that? And so I was going to ask Aaron to sort of jump in and talk about that. This company's had a couple of great successes in the last year with American Fiction, and as we mentioned, also Saltburn. So Aaron, maybe just talk about your take on the state of the independent world today.
I think it's thriving, provided people have financing, which I think we'll get to at some point. The cost of financing is quite high now, which is challenging, but it's still a core part of our business model. MRC produces a lot of high-end TV shows, like a lot of other studios. We produce some high-end film, but we're really focused on the independent film, anywhere between $5 million to $15, $20 million. So UK is a sweet spot for us. As you mentioned, Cord Jefferson, we did that in Massachusetts, which, as you know, has a great tax credit. One of the things that we emphasize is fighting, creators. So certain types of talent that are writer-director combos, sometimes first-time directors like Cord Jefferson. And, anecdotally, he came to our offices a few weeks ago and met with the entire company, brought his Oscar for Best Adapted Screenplay. Extremely charming, extremely gracious. And what he said at the Academy Awards a couple months ago, we discussed. And there's a lot to be said about making original stories that fit an audience that particularly I think should be attractive to streamers for those consumers who are no longer going to, who have young kids who are no longer going to the box office to see adult content. So we love it, and it's been a great experience.
Caitlin, what are you sort of seeing or experiencing with our independent clients in terms of what's going on in the independent space right now?
Yeah, so we are hearing a lot from our independent clients just really struggling with the streamers kind of pulling back on purchasing their content. And so they're really trying to figure out creative ways to make innovation and, innovative content and really, make sure that their productions are made at a price point that when a streamer is interested, they can sell it and make a maximum profit. And so we're finding that, we get the requests quite often, Joe, as you know, we pass them over to you, where they're really looking for how best to make their productions and where can they best make their productions. The other thing that we hear a lot, again, really kind of as the industry is recovering from the strike is, where do I go? How can I maximize incentives, not just here in the States, but outside of the States? And one of the key questions we're starting to see just really bubble up with the announcement of the UK credit is, how can I go to the UK? And for a lot of our independents where there's a financier and a creative producer really trying to pull together their project, it's new territory for them. They don't know what the impact of, the financing is going to be if they go to a foreign territory. And so they really come to us and our teams to really try and make sure that they're able to maximize that opportunity and then really kind of how do they execute that in that territory. And so we get a lot of questions about that, just trying to make sure that they can, set those productions up for success. And then, of course, for us on the technology side, it's how best to, leverage applications like the Movie Magic budgeting program so that their budgets are set up correctly for those territories. And then obviously, I know, Aaron, you're familiar with this with your shows, but making sure that they can track the incentives so that they can, again, maximize the credit on the back end with the accounting system, which is really mission critical when you're going to a territory to make sure you have somebody who understands the incentive and can accurately track that so that you can maximize the return. So we're seeing a lot of those questions come in on how best to really focus on that end-to-end workflow.
And Lloyd, what about you? We're going to talk again about the incentive a bit later, but in terms of the overall environment in the UK with regards to independence, anything you want to sort of highlight here? So I know, because I was just going to say, we've talked about earlier, we were reading for a while that there was a sort of a lack of resources because they were competing with the larger producers, and I'm not sure if that's changed because of development of infrastructure in the UK. But where does that all stand today?
I think at the moment, crew-wise, we've got brilliant crew talent pool, and there's a lot of crew available. There's been a lot of stuff in the trade press over here about crew being out of work and wanting more work. I don't think I've seen as big an uptick or at least a bigger injection of energy into the sector as the IFTC has inspired. The number of inquiries we're getting about it has really, really gone up versus what we'd have got from independent film before. I think the sector is good, it's strong, but I think it needed support, it needed something to help it. And I think this is a great way into it. I mean, you look at the UK, you've got people like Blueprint Pictures, Seesaw Studios, Marv, Ink Factory, all sorts of independents who've got Oscars between them or make phenomenally financially successful movies, even if they're not Oscar aimed or anything like that, someone like Marv. But I think that there's a really good talent pool, and coming over from the US now, we've got great line producers here that can help guide you, help run it. We've got great infrastructure on the tax credit. There's financing available against the tax credit, including the new IFTC. So I think it's a really good spot at the moment, but there's been a lag from the strikes. Things haven't picked up as quickly as they can, as quickly as people had hoped. So at the moment, there's crew here that want to work. So I think it's opened doors for inward projects at the moment, really.
They needed this webinar.
Yeah.
What I would add to that, Lloyd, so in the 3 years that I've been at MRC, we shot 3 films in the UK and posted in the UK, all of which would have otherwise qualified for this credit, and would have changed the economics a bit, obviously in our favor, but also would have put more money on screen. Whereas even in LA, believe it or not, we shot Self-Reliance in LA, and it was a lot harder to find crew and good accountants. For those of you in production finance, it was a lot harder in LA than it was in the UK. Shockingly.
Well, Aaron, you also mentioned before, which is no surprise to everyone listening, is sort of the lack of financing, or more importantly, the more expensive financing because of the interest rates. So the good thing is you've got incentives out there now, this UK incentive at 40% that definitely will help supplement that expensive money that's still out there. That really does impact the independent producer.
No, and the exchange rate is so favorable right now, relatively.
Right. Especially between the U.S. and Canada. The other thing I wanted to talk a bit about before we got into the incentive itself is even changes in the festival circuit. We're seeing how the festivals themselves are struggling, and that really was sort of the key marketplace where independents brought their films to get purchased. And even this year, because I was at Sundance, a lot of the streamers, which sort of the last couple of years were all at Sundance, they weren't there this year, at least in person. I guess they were represented in one way or another. So there seems to be a shift happening that I guess we'll have to see how it all plays out. But going back to your project, Aaron, American Fiction, that did play at Sundance not 2023, but 2022. Is that correct?
2022, yes. I think it won the TIFF award. And we actually, speaking of Sundance, we didn't go this year. We didn't have a film to sell, but we sold Fair Play there, which we shot in Serbia, to double for New York. So
wow.
Yeah.
And so with the American Fiction, was that something that got purchased by Amazon at the festival, or were they on board before the festival?
I think they saw it at the festival, and okay. I think, I wasn't there, obviously. I don't handle, the distribution. Our corporate presidents went there and, began entertaining offers from various places. It was obviously very well received. But in terms of at least our approach is when we have a film, certainly one that we believe in, we'll go to as many festivals as we can. And, to the point Kaylin made earlier, we're making these for the right price point. particularly when streamers are accustomed to paying quite a bit of money for things. If you make it an independent film, if they'll pay $15 million for a film you paid $8 for, I mean, that's an incredible margin.
Right. I guess the other big change that just happened, I guess, in the last month or so is participant going away, which was a very important social impact producer of independent content. So that was a disappointing thing to see happening. But luckily, your company and A24 and Blumhouse and Lionsgate and Neon are all doing quite well here in the U.S. And Lloyd mentioned the UK companies as well. I think the last thing I just want to mention before we jump into what independent producers need, and then we'll have Lloyd walk us through the UK incentive, is I've been reading a lot about independent TV, where we see companies like the Duplass brothers actually self-financing TV content and then selling that. So I'm just wondering if any of you have any opinion on that. It's an interesting idea, because obviously the producer's taking all the risk with the hopes of it getting picked up by a distributor. So do you think that's something that will get traction?
I mean, I can speak just, for the clients that we're working with, we see that a lot where, there is the producers, the creative producers actually financing a significant portion along with a financier and really seeing the two of them try to really pull together a project. And, oftentimes they'll, bring in a line producer who also then tries to help them figure out how to make the project, Aaron, to your point, for a price point that really is going to be advantageous. And then they go around and trying to shop the project. And so we see that a lot. And there's complexity in that, Joe, especially when it comes to payroll and making sure you have the funding in place, because you're trying to figure out, can you make the project for the price point, and what does that mean to the impact? How much can you put on the screen to make it the project you want? And then also trying to get the talent and the crew attached to it to that price point, right? There's high appetites out there for certain categories, and you're wanting to bring it in under a certain number, which means changes. And when you get the creatives involved, they're used to some of these former big budget projects, and they're now coming over to these independents to make great content, but it's a different world. So the expectation setting we see is really hard for these independent producers, where it's just two people with their money trying to make a great project. Setting that expectation is really difficult, and you can see a project kind of, dare I say, swirl for a little bit until they can kind of find the right makeup to kind of, lift off the production and, kind of execute. So, I mean, that's kind of what we're seeing across the board.
I think in the UK, we haven't seen self-financed TV shows in that way so far. Certainly not at sort of the high-end TV tax credit threshold. There's been a slowdown in commissions in the same way there's been a slowdown in sales in film. So that's something we're kind of looking at with a lot of our clients at the moment, is how are you getting those commissions? And interesting to your point, Joe, about participant, the things that are getting traction here, both film, but even more so on TV, are ones that have got social message. We had Mr. Bates versus the Post Office, probably hasn't made waves in the States, but over here it's been a big story, scandal in the Post Office. And that's been the biggest TV show of the year so far, because of the social message, as simple as that.
Mm-hmm. It's also an interesting thing I've been reading, and it's all about sort of genre. I read an article recently that sort of the Gen Zs and the millennials are really not interested in projects that are either franchises or sequels or reboots, and they really are more interested in original content and original stories. And that's where we see it happening, right? In the independent world, where we see really creative stories coming out of that. So I'm excited with all of this. Again, I know there's struggles in the industry, but obviously the financing is our issue, resources are issues, distribution is obviously probably the biggest issue, I think, for independents. I'm old enough to remember that movies got made, and even though it didn't get a theatrical release, you had an automatic home video release, right? You always had that VHS or DVD release. Mm-hmm. Now that's definitely dwindled quite a bit, definitely in the US. And so you really have to rely on a streamer to get a distribution. So that's a big factor. So I don't know if Aaron or Caitlin, you want to add to that before we jump into the specifics on the
I'd agree with all the points you made. I think something Caitlin was saying, just thought to remind, I guess, all the participants, is thinking about when you're planning that kind of film, is think about the cost and the deposits that you have to make in your planning, because if you're independently financing, you're going to always put out more cash than what your budget is, whether it's particularly if you're a SAG show or DGA show, you'll be putting up those deposits. So that's something to contemplate in your cash flows and your planning.
Right. So Lloyd, let's talk about the UK. And I thought it might be a good idea to revisit the audiovisual expenditure credit that's new, and then we can jump to the independent credit. And also for everyone listening, we're going to be sending out a one-sheet summary that Lloyd put together that'll give you a really great overview of the audiovisual credit and the independent credit. So everyone who's registered will get that sent to them. But so maybe just start with what's changed in the UK with regards to tax relief shifting to the audiovisual credit.
Sure. So short version is AVEC has come in. AVEC is a suite of reliefs now, all housed under one umbrella that has replaced the old film tax relief, high-end TV tax relief, children's animation, and children's television and animation. So AVEC is live now. It's been live since the 1st of January this year, and it came in with effectively 4 streams. You had film, high-end television, which is £1 million an hour is the bar set for that, children's television, and animation. So the first change from it is animation is now film or TV. Previously, it was only television. So animated film can now fall into that bracket. The reason that's important is that the rate of relief has changed, in some cases slightly, in some cases more than slightly. So film and high-end TV now get 25.5% versus an old 25%, so minor uplift. Children's television and animation now get 29.25%, so quite a significant increase there. So for animated films, so if you're, Aardman, stop motion animation, or tradition or line drawn animation, whatever it may be, your animated films can now get a higher rate of relief, which is fantastic. You still need the same rules as before. You have to be the film production company or television production company. You have to pass the UK cultural test. And the rules on what qualifies and what doesn't qualify in terms of spend haven't changed. So we still operate.
Can I interrupt 1 second? Because when you talk about the rate, one thing I think still confuse some folks is that you've got this gross percentage and then there's the net percentage. So you might read in the paper that the film and TV is now getting 30%, but the reality is it's 30%, but then it's taxed, so you're actually netting that 25%.
So that's correct. So the headline rate for film and television is now 34%, right, but that is taxed at corporation tax rate at 25% tax rate, which gives you your 25.5. What I would say is you never pay that tax. It's notional. It's for me to deal with in your tax return. You don't have to pay out money to get money in. It's all to do with global tax policy. And in short, it makes global tax policy easier for larger companies. But they wanted to do that so that it wasn't disadvantageous for anyone. So your headline rate is 34%, gets you 25.5%. It is still subject to the 80% cap. So if you're doing completely in the UK, that 25.5% is capped at 80%. So you would get at most 20.4% of your total spend. Same applies for the animation in children's TV, which is 39%, which goes down to 29.25%. With the 80% cap, that works out to 23.4%. It's all a little bit confusing. The really important numbers are 25.5%, capped to 20.4 effective rate, and 29.25 capped to 23.8. They're the ones to keep in mind.
And let's just talk a bit about the types of productions that qualify. I mean, clearly, scripted film and TVs are high-end TV, but I recall there being some confusion around documentaries / unscripted.
Yeah, so documentaries can qualify. There is no requirement for it to be scripted. If you spend enough on a documentary to qualify as high-end TV, you can qualify. They've tightened the rules slightly to avoid pseudo-reality being called a documentary. So it has to be, I forget the precise definition, but based on real events designed to inform rather than to entertain, if you want to be considered a documentary. Documentary films, that's fine. There's no limit there. But our high-end TV doesn't allow for live shows, reality shows, contests and things like that. So that's kind of where that line is drawn. And for children's television, the target audience age has to be 15 years or younger.
You said that basically the criteria to qualify really hasn't changed. So maybe just remind everyone what the general criteria for the UK is.
In terms of the incentive, in terms of what cost to qualify. Yeah. So for a cost to qualify, it has to be used and consumed in the UK. It's nationality blind, it's currency blind, it's payment destination blind. In fact, so long as the company making the payment is within your structure, it's payment company blind as well. The best way I can explain this is to say, okay, we've got a film, independent film, but we've got a SAG actor engaged. Well, we're going to have to engage them through a SAG signatory company. That's going to be a US company. So we're going to have to get a US company engaged to help us do that. Well, that payment is going to be made in dollars from the US company to the US actor. So long as that US actor is performing in the UK, that is still a UK qualifying cost because they are in the UK when their services are used and consumed. The same goes for if you're bringing things in, wigs, particular cameras, even if you had a specialist camera that you needed. All of that will qualify as UK. However, the flip is true. Just because you've got UK crew, if you're sending them overseas to shoot in America for a week, none of that's going to qualify. So it does go both ways. It does make things more generous on the whole. And it also makes things a little bit easier once you get used to it anyway, of was it used in the UK? Yes, right, qualifies. We can move on. You don't have to worry about quotas and caps. There's no above the line cap. There's no ratios. There's no minimum spend or anything like that in terms of film. However, for all UK incentives, at least 10% of the spend has to be in the UK. So you could do a post only in the UK as long as 10% is UK.
And that's what I really wanted you to highlight, that that's the main criteria, as long as 10% of your overall spend is there. But isn't there also, I can't remember if the 10% goes away if you're a co-production. Is there is an exception if it's a co-production?
If you're a co-production, it's 10% of the total production, but it depends on the co-production treaty. Some actually have a minimum of 20%. I believe there's one that's a minimum of 30%. Co-productions are almost well done to themselves. Joe, you and I did a great webinar on co-productions actually, so people should go and watch that. But yes, there are still rules on that. It is absolute minimum 10%. Certain treaties, it's 20%.
Going back to the co-production, am I not mistaken that if you are doing a co-production, you don't have to do the cultural test?
Correct. If you're a co-production, you do not need to qualify under the cultural test, which is one reason people do co-productions. If they've got a film that would otherwise qualify, but they couldn't pass the cultural test, but it is a legitimate co-production between UK, France, let's say, we can do it under the co-production treaty and still access tax credit, which is great. It opens it up for more.
Right. And talk about the cultural test a bit more. I don't think people are as afraid of it as they used to be. But I think when you talk to somebody who hasn't heard of it and you say, what's a cultural test? And you got to qualify as a British film. I think certain images come into their head that this has got to be a very Harry Potter, Merchant Ivory. And so it's not that specific.
No, it's not. You don't. Harry Potter and the Full Monty are my two reference points. You took one away. No, it doesn't have to. It does have to pass the test. The test for film and TV, there are 35 points. You need 18. There's one banned combination of points, but only one. So however you get your 18 points, barring one combination, you qualify. It's split in two halves. There are 20 points available, very broadly speaking here, for what you see on screen. And there's 15 points available for... Sorry, I've got that wrong. There's 22 effectively available for what you see on screen and 13 available for where the work was done and who did it in various different categories. You just need 18. You can get all 35. Congratulations. It doesn't help you. It really doesn't. You've got 18. That's it. You qualify.
You need, right.
Lloyd.
Aaron.
No, yeah. I'm sorry. Go ahead. No, I was just simply going to say one thing. I was thinking of something you said earlier about hiring a SAG actor, shooting in the UK and qualifying for those. It might be helpful to know for where it's very relevant for independent films, but also big studio films, is qualifying your talent participations and contingent comp.
Oh, my favorite topic. Absolutely. Thank you. Yes. So, under the UK system, as long as you have set up your agreements properly, back end payments to talent will qualify for UK tax credit at the same ratio that their underlying cost did. So, if your actor just performed in the UK and they've got a back end percentage of net profits, those payments will qualify down the line and you can claim incentive on those as well. Joe, you have a great phrase for this, and I can never remember it.
The gift that keeps giving.
That's the one. I don't know why that won't stick in my head, but it's really really valuable. And I've known one show that I believe was in over 10 years worth of contingent compensation payments that were tax credit eligible, which is fantastic.
Wow. So, Aaron, maybe you could just share your experience. I know we're talking about the new audiovisual expenditure credit, but again, the basic rules are the same. I guess when you were there, maybe just talk about your experiences with sort of working with the incentive and maybe some of the things you might want to share with the audience.
I think relative to our experience in the US and some of the credits, which are much more complicated, and there's a lot of independent rules, as many of you know, and what qualifies, what doesn't, going through a third party audit and having the debates no different than an insurance claim as to why this should qualify or what this really means, or retrieving backup. In the UK, it's so much more user friendly. As Lloyd was saying, it's used and consumed. That's kind of the guiding light. So we've had great experience claiming the credit. It's been quite quick and not a lot of pushback. And it is the gift that keeps giving. We've got a film that I did not work on, Baby Driver, many years before, still claiming the UK credit on participations.
Wow.
So,
I think timing's a great point, actually, Aaron, and it is one thing I think the UK does really well. After you submit your claim to, it's run by our central tax authorities, I'd expect you to get your money back in 6 to 8 weeks, and that's cash deposited into the bank account, which compared to a lot of jurisdictions worldwide is very quick. You might need a couple of months to get the audit, so 4 months from when you do an interim claim or when the film is completed, you could have the money back in your bank account.
That's amazing. Hey, Caitlin, can you just share with the audience sort of how EP is sort of supporting not just independents, but all our clients in the UK from a payroll perspective?
Yeah, thanks, Joe. We have been in the space for a while. We have, for many of you who've worked with us here in the States, we've spent our time really trying to replicate the service model that we have here in the US within our UK territory, just to make sure that when independents come into that space, they know and can expect the same level of service. And so just to kind of articulate what that looks like for an independent coming in, oftentimes, they're new to the accounting system. They may have used a different accounting application. So we spend a lot of time with them making sure that the accounting system is set up correctly. I know, Aaron, just kind of with the shows that we've done together, that is critical from a tracking perspective so that, it does make the reporting on the back end really easy. And so it's just kind of walking the productions through that process, making sure that as you find your accounting staff and, start staffing up your accounting teams, that they feel that they're able to kind of track all of those expenditures because you're spending it so quickly, especially in the independent space. Time is really of the essence because the shoots we're seeing anywhere from 6 to 8 weeks, with a couple months of prep coming in. So it's like making sure that we've got the systems ready to go, up and running, so that you can actually take off and make sure that you're tracking those expenditures as they're coming in and track them correctly, I think is really, some of the effort that we've been putting in place and just making sure that we have those on the ground resources available to go out to the productions. We have had to send our teams out to the productions just to make sure that, they're getting the full level of support. There isn't any, lag time or wait time when they have a question has been where we've seen the majority of our successes with our independents on the ground in the UK. And so, just a great group of people. And then also just really helping source talent has been something else that we've kind of worked on, is just making sure that there are really great crews available to this sector. That they, can bring in an accountant, because typically you don't have the same size budgets that you would have on a large studio project. You don't have a massive accounting team. You've got one financial controller and a payroll person. And so it's really important that those two individuals are set up for success to make sure that, they can, track the costs at a rate that makes sense for the production. So we really have spent a considerable amount of time standing up that organization within the UK territory to take on the volume of work that we're kind of hopefully seeing, to continue in the space.
Great. And I just want to remind everyone in the audience, I'm sure Natalie said this in the intro, but Lloyd and FLB are part of the EP team in the UK, supporting our clients in the incentive space. So Lloyd, maybe you could just share what you're doing in terms of types of services. And then before we really spend the rest of our time talking about the independent film tax credit, just talk about the overall application process and just setting up shows. Like if you're a US producer coming to the UK, obviously you need a UK company. So just sort of walk through the basics of what you do and how you can help clients.
Sure. The basics is we can help you from start to finish. So when you've got no company in the UK, nothing set up, we can help you set up your company, incorporate, make sure that you are going to qualify for the tax credit up front, do a cultural test review with you. We can do the application for you as well, not a problem. Go through a budget with you and say, okay, based on this budget, this is the value of the credit you're going to get. Are you going to qualify for the new independent film tax credit as well? Very important. Go through all of that. Within the FLB team, we have production accountants as well. So we can help you crew up your production accounting offering in the UK if you want. Obviously, fully integrated with all of the EP, payroll, smart accounting, all the different softwares, so that it all links together nicely. And then from then on, I can help you manage the credit. So how are we going to get it? Are we doing an interim claim and a final claim? We're just going to do a final claim. The way the UK works is slightly different. It comes off of your company tax return, which comes off your company accounts. So we help you prepare the company accounts. We prepare your tax return, do the tax credit calculation. If it needs an audit, our audit company can do that for you as well. So it's all sat under one roof. And then we review it with you, we submit it, and hopefully 6 to 8 weeks later, the money lands in your account. So very much kind of one-stop shop. We can help you from the very beginning right through to the end of it. And then end of life for the company as well. If we're going to keep it open, hoping to get participation credit, sure. And if not, how you close it down, make sure the rights are out of it and done, all cleaned up. So we can kind of do start to finish.
In terms of the application, I know the UK doesn't have any sort of annual funding cap. So does a production have to pre-qualify? How does that all work?
No, there is no pre-qualification in the UK. In theory, you could come to the UK, and as long as your company is set up properly and you know you're going to pass the cultural test, you wouldn't actually need to do anything until you got your final certificate when you'd finished and you submitted your claim to HMRC. There's no pre-qualification. As you say, there's no annual cap. HMRC don't run out of money. I really hope they don't. Otherwise, the country's got even bigger problems. But there's no benefit to submitting on the 1st of April versus the 31st of July or the 12th of December. Every claim gets treated exactly the same in the same order. So it's really good from that perspective. And again, we help you manage cash flow within the production. If you've got a tax credit lend, probably worth doing an interim claim, reduce your finance costs. If you're lucky enough to have some angel investor who's funding the whole thing for you, then save the admin costs. You don't need to pay me to do 2 claims. Let's just do one at the end. So how you want to do it is how we can help structure it.
Well, that's really important to highlight because I know I deal with a lot of clients and they start spending money sometimes in a jurisdiction and then realize they needed to pre-qualify or do something. So money spent prior to submitting some sort of pre-application doesn't qualify. So it's important to highlight in this situation that's not going to happen in the UK.
Yeah. Totally agree. You don't have that issue. You do the critical thing in the UK with global structuring. The UK has to be responsible for everything. So everything has to funnel through the UK. It's a contractual requirement, doesn't have to mean all the money flows that way. But a good media lawyer in the UK plus us can help you structure that. I know, Aaron, you and I have worked on shows in the past where it's been multi-jurisdictional and it's not actually that complicated in the UK, fortunately, which is great. But having your company set up early is a must. If you start filming in the UK and then you set your company up, you're never going to get tax credit. It is the most important bit of everything, to be honest. Very quickly, I noticed it come up in the Q&A. Someone was saying about a rate card. The way it works in the UK, we can't work on percentages and things like that. So we would quote for any project on a bespoke basis after having an initial conversation with the producer. Just felt like a good point to mention that as I see it.
Sure. So I wish I had a drum roll, but let's go on to the topic of please, Aaron. Yes.
No, sorry. One thing I would just share with everyone, the one cautionary tale in the UK, which Lloyd, you could probably echo, or you can direct me to the right person. But after setting up the company, as Lloyd described, which is what we do, is setting up that bank account and starting that process immediately. Because
that's what I was just going to chime in and say. It's not just the company; it's also the bank account.
The bank account,
right? Yeah, setting up a bank account in the UK company, in the UK for a company, particularly if you have American directors or any overseas directors, can be a bit of a drawn out process. It is getting better, but it can be a bit of a drawn out process. So the earlier you start that process, the better. I totally agree with both of you there, Caitlin and Aaron. It is, you can't just walk into a branch and get a bank account like you for a company, as I believe you can in other places. Unfortunately, it's to do with our anti-money laundering rules in the UK.
It is probably like the number one issue we run into with productions going to the UK is they don't have that expectation. They're not aware of that. And so they go there and they don't have the company and bank account set up, and it just slows everything down, and it creates a major frustration for all involved. So I can't stress that enough.
So Lloyd, why don't we get to the topic of the webinar, which is the 40%. I think it's hopefully going to be a very straightforward conversation. Everything I've read is nothing overly complicated about it, but why don't you walk us through what it is and how it works?
Absolutely. So you're right in essence, actually, Joe. It's great, it's great because of its simplicity. So this is a new strand of AVEC. It's not a new system. It's not a new approach. It's an additional strand of AVEC. So we've already got the system in place. And independent films will now be eligible for a 39.75% incentive. Now, still, that is the net of tax figure. The gross of tax figure is 53% for those that would like to know that. It is subject to the 80% cap. So it would be capped at a 31.8% level. But if we do a like-for-like comparison, you're comparing 20.4 to 31.8. So if you're eligible, it's over 50% more cash coming back to the film, which is just fantastic. It really is. The obvious question is, how do you qualify and what's an independent film? So there are two criteria, and there are only two additional criteria, which is the film must have a budget of £50 million or less, and you must have either a UK writer, a UK director, or be a qualifying co-production. I would say the legislation for this hasn't come out yet. It's been announced in our budget, but we're waiting the legal form of it. The general view and my personal view would be, I don't think that 15 million is going to go anywhere. That has been chosen for a very good reason. So I think we can rely on that staying there. The details about the UK writer, UK director, we wait to hear some clarification on that. For cultural test purposes, the writer will qualify if it is one of the three lead writers. So there's a belief that could be the rule here, which would open it up to more films. Or they could say, no, it's whoever is the lead writer. Given that you can have co-writers on a film, my gut feel is they'll keep it the same as the cultural test rules of one of three leads, but we wait and see. Director is director. It will probably be a UK national or a UK resident is the expectation. But that's it. There is no requirement on financing and what your finance plan looks like or anything like that. The independent element is effectively driven by the £15 million cap.
What about theatrical release requirement? Do they have to have that lined up prior to the start of the production?
It's the same rules as for general films. At the point you are making a claim, you have to have an intent for theatrical release. In the legislation, the guidance manuals, the expectation is that you get a significant proportion of your income on the film from theatrical release. There is no legal definition of significant portion. HMRC's guidance says 5% of total could be considered significant. What does it mean in reality? Well, what is your plan for the film? If you turn around to me and say, well, actually, we're making this and we're hoping to sell it to a streamer, no, that isn't a plan for theatrical release. If it's, we're making it, we're going to take it to Sundance, we're going to take it to Cannes, we're going to take it to, and try and sell it, well, that's an intent for theatrical release. You're making a film to try and sell it to sales agents. Great. Fantastic. That hits the requirement. If down the line, you're not getting any traction with those, you've tried, you've got quotes, it hasn't worked, and Amazon, Netflix, Hulu, whoever come along and say, we'll give you this for it in perpetuity, that's okay, because you had the intent. And were we ever questioned by HMRC, we can go, look, here's our negotiations. We tried to do it, it didn't work, and that's okay. But you have to have an intent. For short films competing on the festival circuit, HMRC will accept that as intent, because that's how short films make money, or don't make money, or that's how they get viewed. So HMRC are quite good for that.
Well, it's important to know. So if you're a streamer, just because you're a streamer doesn't mean you can't qualify this. It's really what you're intending to do with the film.
Yeah, I think it wouldn't work for an independent film, clearly, given the cost of it. But The Irishman being the easiest example, that wouldn't be a film. That would be a TV show, because that was made by Netflix for that. I appreciate it was Oscar considerations, et cetera, but on very high level, and I wasn't involved in that, so I couldn't possibly say, I would say that wouldn't work. But if you're releasing it cinematically and it's going into theaters, that's great. That will get it to you, even if it then goes straight on or dual release with a streamer. It's about that intent. It's not going to work if you show it in a single rural cinema I always use Norfolk as the example in the UK, but let's pick Montana as a state, purely because I was listening to a college American football podcast today and they were mentioning Montana State. But one cinema isn't going to do it. It has to be a genuine intent to make money from it. And so long as the intent is there at the point at which we are cutting the books off to make the claim, that's fine. The fact that it subsequently changes is okay, but what was your intent there?
Right. And I'm glad you sort of made that distinction of what is independent, because here in California, they have a specific definition that to be independent, you can't be publicly traded or own more than 25% by a publicly traded company. And that's just not the way it works in the UK. So
no, that isn't the case. It is just the 15 million budget. I think the other thing, if I may, on the budget, the immediate thought is, I could imagine is, well, I'm going to put together a budget of £14.999 million, and I know I'm going to overspend, but I'm still going to qualify. There is going to be a check and balancing on that. When we submit the cultural test application, there's going to be some form of assessment by the BFI to say you qualify for the independent film tax credit, and they're going to look at the budget. If they see a budget of 14.9 million with no contingency and a superstar actor attached to it, they're going to question it and it's going to get knocked back. So that is already in there. However, overspend isn't going to disqualify you. HMRC have already made this very clear. If you've got a legitimate, let's call it a £13 million film, you have a freak weather accident, or your lead breaks their arm on set, Tom Cruise breaks his ankle doing a stunt. Unlikely a Tom Cruise film is going to fit into this, but if that happens and you've got to reshoot and do all of that, it isn't going to break your eligibility. What will happen is your credit will be capped out. So you will never get more than the 39.75 or 31.8 with the cap. That is going to be the maximum credit you can get, but you're not going to be excluded from the regime. And that was in their initial policy paper on the matter as well. So that is already definitely going to be the case, we believe.
And I just want to mention to the audience, so that £15 million is approximately about 18.8 or 19 million US, just for those who are sort of running numbers in their head. So Aaron, I wanted to jump back to you since this is new for you. It's a new program. Any thoughts or questions that you have that we may not have covered with Lloyd?
Actually, I had a question for Lloyd. So if we were doing an independent film and we packaged it and sold it to either an Amazon or Netflix, pre-sold it, it would not qualify because the intent would be to be on a streamer. Is that correct?
Yeah, if it's going straight to, if you pre-sold it and it's going straight to streamer, it's not going to qualify. However, if you're getting a theatrical release alongside it, then it would be okay.
Okay.
So, as I always say, we're not running out of time yet, but we want to leave time for Q&A. But before we go to audience Q&A, I just want to ask each of the panelists if they had to give any advice to an independent producers out there, whether it's specific to incentives or productions in general. What would you say? Since Aaron, you're on my screen at the moment, I'll start with you, and then we'll go to Caitlin and then to Lloyd, and then back to Natalie for Q&A.
Well, I mean, certainly secure your financing. I think financing, at least in the experience of your structure, is quite important in the UK simply for virtue of opening your bank accounts. There's a much more extensive slew of questions in getting to know your customer, understanding where the money is coming from, presumably for the equivalent of our Foreign Corrupt Practices Act. That would be probably number one. But I'd also say, having worked at a studio for a long time, and not worked in the independent space until now, don't be afraid. There is tremendous amounts of great crew. You can shoot in the UK, particularly with a strike coming up, or the threat of the strike. UK is probably the most attractive place to us right now. And you can go there non-SAG, non-DGA, and you've got, obviously some of the best locations and some of the best crews in the world, all the way from reasonably priced crew and accountants to, expensive ones. But there's a lot of people available for work there. And, it's been a great learning experience for me, even after having worked on studio films forever.
We did a panel a few months ago, and I remember somebody saying they had shot a film in the UK, and it was supposed to be Cleveland. So everyone thinks about the UK with a certain look and feel. You can definitely, through the magic of filmmaking, you can sort of recreate it to be anything you need it to be.
Absolutely.
So Caitlin, any advice for us, for panelists?
I would just yeah, of course. I would just pile on a little bit with what Aaron's saying, but also kind of just making sure that after you're securing your financing, just making sure that the project fits the budget, right? The budgeting process, we see this time and time again. We hear about a project who's ready to go. They want to set it up with EP. We're excited about it. And then it falls out because, it turns out the talent that they're bringing on board is, looking for higher pay, and so it's not quite fitting that actual budget. So just making sure that budget is realistic and tagged correctly, to Lloyd's point on all the calculations, and making sure that that's, kind of ticked and tied as best you can, I think is really critical, as well as going out and getting your bank account in your companies. We see it so many times where we get a phone call from a client who's like, I have to pay a director. We're like, great. What's the company? Do you have a bank account? They're like, no. And so it just slows us all down. And so I would just say kind of those three parts are so mission critical to kind of just kicking off the production successfully. So that would be my recommendation, is just really making sure that budget really, really fits kind of the scope of the project.
Right. And Lloyd, any any last thoughts before we go to Natalie?
So I would say ask questions early. I love the startup of a production. It's far more interesting talking about how we're going to get it to qualify, what structure you need, how you pass the cultural test. Calculating the incentive is boring accounting work, which is what I'm paid for, I will admit. But I far more enjoy the creative side about how we're going to get this qualified. It's far more entertaining. One thing I didn't mention about the tax credit that I really should, it's live now. Any film shoots after started shoot after 1st of April 2024 and is eligible will be eligible for it. However, you're not going to be able to submit a claim until the 1st of April next year. So there is going to be a time lag on that. So people need to consider that in their financing and their tax credit cash flow. That's something to consider. Because it's not legislation yet, some lenders don't want to lend against it. Some will. And if people want to know about that, please contact me. I can introduce you. They will want opinion letters over it in the same way they want an opinion letter over any other credit. The process would be pretty much the same on that front.
Fabulous. So Natalie, we're going to turn back to you and see what our audience is asking out there.
Luckily, we've covered a lot of the questions that have come in today through the conversation, but I do have a couple of individual questions about the tax credit. So Lloyd, I'm going to give these to you if we can clarify. We know that there's the 15 million cap. Is there any sort of minimum associated? And are short films eligible?
No minimum. Yes, short films are eligible.
Fantastic. And regarding the cultural test, I know you mentioned that director, one of the lead writers, is a UK distributor required?
No requirement for a UK distributor at all. So there is no additional requirements at all on it versus any other film beyond sub 15 million and have one of UK writer, UK director, or qualifying co-pro. Who your distributor is, who your sales agent is, who your producer is, doesn't matter. They're the only extra requirements.
Wonderful. And I know we're waiting on a few details to be ironed out from HMRC. Do we have an anticipation of when we may have those additional details, maybe in the summer or?
Yeah, so we'd expect, given the spring budget, we'd expect draft legislation to be coming out June or July time. That'll be out, circulated for comments, final legislation following that, and it would probably become law towards the end of the year. This is why we can't pay out anything. HMRC can't pay out anything until April next year because it has to go and become law before anything else happens. Also, they do need to get their systems ready to be able to pay out at a higher percentage in the background as well. So there is that's the reason for the time delay. But whilst it is a shame that there's that time delay, you're eligible now. So at least you're eligible for it rather than being in an awful situation where you go, oh, if I'd have made this a year later, then I'd have got that.
And now I want to go back to Lloyd for one point and have him expand on it because he brought this up when he was talking about the independent film credit, and that's the 80% cap. That's something that doesn't just apply to the film credit, but also the AVEC. But also, it's not the type of cap that people think initially. So maybe you can just explain exactly what that is.
Yeah, absolutely. So the way it works in practicality is you go, what spend qualifies all around the world under the UK laws? Where is it used and consumed? You split that between UK and non-UK. You get 25.5%, or in the case of the IFTC, 39.75% of the lower of the UK, or 80% of total. So you can never get more credit on more than 80% of your total qualifying spend, which is what creates the net effective rate of 80% of 25.5%. So a fully UK film, you know it's going to be that. If you've got 30% of your spend in America, you're going to get the higher rate on your UK spend.
Great. Sorry, Natalie. Is there anything else from our audience?
No, that's all right. Actually, we're slightly over time, so that is going to be our last question for the day. But thank you, panelists, for all of the wonderful information that you've shared today. And thank you to our wonderful audience for tuning in and sticking with us and submitting those questions. One quick thing I'd like to point out is that we'd like to introduce that we have recently launched the Production Lot, which is a new community platform where you can connect with our experts as well as industry professionals, peers from across the globe. Anyone who is in the industry or breaking into the industry is welcome. We would love to help you expand your network, access exclusive content and the latest industry news, ask questions, exchange ideas. You can find mentorship and hopefully your next career opportunity. And along with this, we would like to invite everyone, if we didn't get to your question today, or you have another question about the independent film tax credit or any issue relating to the industry, please head over to the Production Lot and you can ask your question there. Lloyd, Caitlin, Joe, and our experts will be available and we'll be keeping an eye on the discussion threads. And you can do that by scanning the QR code you see on your screen, or you can click the link that I just shared in the chat. We are very excited to invite you to keep in touch with our experts on the Production Lot and join the thousands of members who are already there. In addition to these resources, as always, if you are looking for guidance on production incentives or financing in North America, the UK, Australia, and beyond, our team of experts is here to ensure that your production gets the best incentive and financing guidance in the industry. On our website, you can explore the incentives news, legislation. You can use our incentives map, our jurisdiction comparison tool, and our incentives estimator, as well as more information about tax credit placement and minimum guarantee financing. A special thank you again to all of our panelists for joining us today and you, the audience, for tuning in. We hope to see you again soon at our next Master Series.